This is the second part of the online course, and I will be backtesting the trend following strategy, and I'll show you guys all the tricks and everything there is to know, everything there is in the book about the trend following strategy in this video. We'll talk about backtesting. I'll try to do like a simulation of my type of the way I do backtesting, but I'm not going to record the trades. That's something that I can do separately, and I'm working on that. And I'm also trying to convince other people to do the same thing. And I will try to create like a cloud, and I will invite you also to join us into creating this cloud. That is going to be a lot of backtesting from different people, and we're going to see the performance from different perspectives. But for now, my goal is to teach you guys how to use the system rather than teaching you how to do the backtesting, all that stuff. But I figured that the way to let you in with all the strategies is through the backtesting, because we cannot do a live trades. I mean, we can do a live trades, but it's going to take forever for a trade to finish, and it does not really make sense in terms of teaching perspective. But as far as the strategy goes, I'm going to try and do the simulation of the same way I do backtesting, and hopefully that is going to be very useful. And hopefully we're going to run into all kinds of scenarios, because you're not going to find only the same scenario all the time. That is going to like, for example, a trend, the clean trend all the time. There's no such thing, but we're going to find different states, different modes of the market, and hopefully cover all of them in a very smart way that will help all of us understand and better understand this strategy. So without further ado, guys, let's get started. And I can see that the market is actually right now on the euro dollar going down, and I got this trade. I could talk about this trade, but it might seem like I have picked this one up, but I'm not going to do so, even though it's obvious. If you are a trend following trader, you would already have noticed that the market was going down, creating a lower lows, and the price is below the cloud. And we have this pullback here, and we got this signal from the trend breakout catcher, and you can see that the price moved in our favor, and then consolidated a little bit here, and then pushed all the way down. This is pretty much, this is actually not a typical example because of this, what happened here. And if you would have seen this, you would be like, okay, maybe the price is, is reversing. Given this point is almost equal to this point, you might think that this is a double bottom. All right, so again, I'm trying, and I'm falling into the same mistake. I'm doing a lot of technical analysis. What I'm trying to do is keep it a systematic system where I do the minimum technical analysis, and I find great trades. So without further ado, guys, let's get into the backtesting of this strategy. So I'm going to try and go randomly back, and I'll start somewhere. Okay, let's say, for example, I'm starting here at this point. So what I see from my perspective here is that the price, first of all, this is very important. Before we do any backtesting, we have to know the rules, right? So my rules in trend following is I have to have a trend, I have to have an entry point or a pullback, and I have to enter at the signal, which is the signal of the trend follower, the trend breakout catcher, and at the same time I have to back up my trade with the multi-time frame panel. So if I'm going here long on the 5 minutes, I have to have at least 3 or 2 time frames above the five minutes that are agreeing with my direction in my bias, and agreeing with the trend catcher bias as well. So in this case here, I would not take the first trade always, unless if I see that the price has started to make sense before the smart cloud. But when the price breaks below the smart cloud, not even closing, just break below the smart cloud, that is a sign that we are still in a sideways, and this is what I call a sideways move. And this system is pretty cool at catching sideways move, because first of all, you kind of see that the candle coloring is changing from green to purple to red, and that is a sign that the price is not trending. When your price is trending, you want to see more green to the upside, trending to the upside. You want to see more green like this, or trending to the downside, you want to see more red. But when you see like a combination of colors, that is a sign that the price is on a sideways move or a ranging move. That's one. Number two, we have the smart trailing stop, and the smart trailing stop can be used also as a support and resistance line. You see this line here, the long line that is drawn here. This can be considered too many times as a support, because it supports the price to the upside, and as a resistance because the price is resisting. It resists basically the price from going up. As you can see here, it acted as a support, and when it breaks below that line, it became a resistance, and it pushed the price down. When you see a line, straight long line like this one here, that is a sign that we are in a sideways move. All right, there's no trend, and that tells me that this one here is not a good entry. All along with breaking up, that's number two, right? The trailing stop. Number three is breaking above and below the clouds. So the cloud is not showing you something consistent, but the cloud and the price are mixing up. That's another way to catch or to spot a ranging move. For example, here, this whole thing is a ranging move, right? So I want to avoid that as much as I can. That is why, and I said I started here. That is why I'm avoiding this one here. All right. But as far as I'm concerned, the moment the price breaks below this range, and that would be somewhere here at this high, then I would start looking for uptrends, right? So the first condition is that the price has to be in an uptrend. So we break above this high, and we're doing higher highs here and higher lows, obviously, and the price is above the cloud. So you don't have to like go in depth about the technical analysis, but just look at the cloud and look at the range. So we are out of the range and we're above the cloud, so that's an uptrend. That can be considered as an uptrend. So my entry obviously is going to be at the next signal, and that's what I got this signal here, and the trailing stop here give me like a good stop, right? That is nice stuff for me. So what I'm going to do is I'm going to enter at the signal, at the close of the bar signal. That's going to be my entry, and I am going to put my stop loss below right here. Okay, below the smart trailing stop. It doesn't really matter. So the moment the price gives me more room, I'll move my stop loss with the trailing stop. So I'm trailing my stop here, and I'm trailing my stop here, and I'm trailing my stop up to this point here. That's where I closed the trade, and that was a break even. Now moving on, I got this signal right here. But notice what happened. The price came back and it took me out with a loss. So basically we are in the same, we are under the same conditions. We are above this cloud, and I got this entry signal here. I would enter at that price right there at the close of the candle, and the price came back and take me out with a loss. Now this one here, I'm still in an uptrend, but notice what happened here. The price broke below the smart cloud, and that neglects the trade. It neglects completely the trend. So what I'm going to do in this case, I'm going to wait for the price to change the direction or give me a new high. Now when I get a new high, that is a new hope for a new trend. So that is what I'm going to do here. I got the new high and I get the entry here, so that is going to be my entry again. So what I'm going to do is I'm going to enter at the close of the candle right there. My stop loss is going to be below here, and my take profit is going to be 1 to 2 risk to reward ratio, and that is going to be a win trade. In the worst case scenario, what's going to happen is you're going to move your stop loss with the trailing stop, the smart trailing stop, and you're going to get stopped out there, and you're going to get this much right here, this much profit. Right now, notice we're in the 5 minutes and we are still doing well. Now the price breaks below the cloud, so I'm not anymore in an uptrend. What I'm looking for right now is I'm looking for a downtrend. So the price breaks below this low. That is a change of character or a change of trend. The moment it breaks below here and it closes below this level, and I am below the cloud, that is where I'm going to start looking for a downtrend, right? So I am in this case here. I'm going to enter at the close of the candle where I got the signal. So I'm entering at the close of that, and I'm looking at 1 to 2 risk to reward ratio. So my entry is going to be at this level. My stop loss is above structure. Notice sometimes I put my stop loss above the smart cloud. Sometimes I put my stop loss above the structure. If the structure is above the smart cloud, I would put my stop loss above the structure. But if the smart cloud is above the structure, I'll put my stop loss above the smart cloud. So my entry here, my stop loss here, I'm looking for 1 to 2 risk to reward ratio, and obviously I got that 1 to 2 risk to reward ratio at this level right here, and I got out of that trade. Now the next trade comes in, and my entry is here. Same conditions as well. We're below the cloud, and we got the trend breakout catcher, a signal from the trend breakout catcher, and we enter here at the signal, and this is the arrow. We enter here at the signal. We put our stop loss above structure again, which happened to be in confluence with the smart trailing stop. So my stop loss is going to be there. That was my entry, and my stop loss is going to be 1 to 2 risk to reward ratio. In this case, I might leave a lot of money on the table, but what you can do, that's why sometimes riding the trend in a trend following strategy, the best way to do it is to use the trailing stop or the smart trailing stop to maximize the profit and squeeze as much as possible. So what you do is you move your stop loss along with the band, with the trailing stop band, and you would get stopped out only here, right? So in this case, probably at before you would have gotten like probably 19 pips. In this case here, you would be getting almost double that, which is like 30.3 points. All right. So that is going to be something to take in consideration. All right. Why I talked about a lot of scenarios, because if you don't know how to scenariorize the whole thing, you're going to get into trouble, because you're going to be jumping all over the place and entering trades and you don't know what is going on. But if you have a strategic planning of beforehand and you know what should be done and what not, you are going to be in a better place. Like here, for example, I got another entry, and this is a tricky one. I got another entry here. I'm still below the cloud, right? I'm still below the cloud, so all the conditions are set. But I got this entry here. Would I enter or not? So if I enter here, the price reverses, and knowing that my stop loss is above here, that's my stop loss. Even if it seems that I did not get stopped out, but the price did not move in my direction, and it ended up taking me out after a long time. So this is a long wasting time. You know, when you hold a trade and your capital is held and you're not doing anything with the capital, that is a huge problem. So that's something you want to avoid, and that's beside the point. Now, in my opinion, from my personal experience, I'm not going to enter here. So you will ask me, why aren't you going to enter there? All the conditions are set. Why? The reason is simple, because I have a different color here this color is different than the white, and that's the reversal zone. That tells me that this trend is overstretched and it's going to end. It's either the price is going to reverse, or the price is going to take a sideways move. That is something that I have as a condition in this strategy, and that's something that saves me from a lot of a hassle. So if I started my trading here, if I started my trading day here, so I'm taking this one was perfect, I take this one was perfect, and I got into this point, and I got this one here, and then it's almost like 4 or 3 hours from the very beginning of my session, and I'm like done here, because I don't want to wait until the trend is taking back on and I start trading again, because I'm good. I got 2 nice trades. If I did this trailing stop here, I got 2% here, and I got like 4 or 3.5% here. That's 5.5% in one day. That is great. And not in a day, in 2 or 3 hours. This is the mindset that you have to also develop when you are trading. You don't have to like keep trading for 8 hours. What you do is you're over trading, and you might get into a lot of trouble. Now, moving on, guys, I got this touch of the reversal zone. That tells me that the trend is ended, and I'm not going to keep looking for a downtrend. That is obvious. So either I would change to another currency, or I would look for the price to reverse completely and give me an uptrend. And also what happened here is the same exact thing as before, as we explained here. What happened is that the price started to move in a sideways, and I know a sideways by 3 things: the changing colors, the mix up of the smart cloud in the price, and also a lot of signals from the trend breakout catcher, and as well as the support and resistance lines that are created by the smart trailing stop. Those are like 4 things that you want to keep in mind. Now, the moment the price started to take off, like here, for example, and I would give you a very quick example here before we go, you have to start using techniques to like highlight these zones. So as long as the price is inside of these zones here, you don't want to take any trades. You want to completely ignore this area here, because it's no good. I mean, if you are going to take trades here and you will get out of the trade with a very small win, you might as well not even enter, because if you have a high spread, then with the commission, it will offset all the profits that you take. Now, the strategy here is to follow the trend and maximize the profit. Now, what I'm going to do is move along and find something else. If I move along here, I have the price below the cloud. That's good, but the price touched the reversal zone. That's again something to avoid. And notice what happened here. I got the price forming this reversal pattern here, and the price started to take off to the upside. Now here again, I got a nice move here, but the entry was not actually above the cloud, so that's something to avoid. Plus the reversal zone, that's also something to avoid. In here, the price started to create a sideways move again, and that is also something that you want to avoid. Moving on, as you can see, the price changing the colors, the price in the smart cloud is mixing up, so you might want to move on. Also, I want you to get the habit to trace the price when it's ranging, and trace the price in this way, and you want to be like, okay, this is a low, or these are equal lows, and whenever the price breaks below those equal lows and below the band, which is here below the cloud, the smart cloud, that is going to be a start of the downtrend, right? This is something to keep in mind. So I break below the equal lows, and I'm below the smart cloud. That is going to be a nice sign that I'm going to be in a downtrend. So I got this entry here. In the same exact way, what I'm going to do is I'm going to enter at the close of the candle. My stop loss is going to be above here, above the previous high. And my take profit is going to be 1 to risk to reward ratio. It's either I would take the profit here if it's reached. If not, I'll keep it up. And maybe if I trail my stop loss, I'll be out here at this level. If I did not trail my stop loss, I would take profit at this level right here. I got another trade here, but I wouldn't take it. Why? Because we broke above the candle, the smart cloud. I got another reversal here. We broke above the smart cloud, even though again we broke below the this previous low. That basically recovers the trend. But what happened here is, before I got the signal, the price breaks above the smart cloud and closes above it. That's even worse. What I'm going to do is I'm going to wait for the price to come back and probably close below this one here, which had happened at this level here, and that recovers the downtrend. And I got this entry here. I would enter at this level, put my stop loss right above the high, somewhere here, and my take profit is going to be 1 to 2 risk reward ratio at about this level here. And one important thing here is when you get the price not breaking above the cloud, that's still a good trade. But let's say, for example, this is what I mean by scenarios. Let's say, for example, you are in this trade and you got another signal before this trade closes. Now, you can either take more trades, or wait for the trade to enter and ignore this one. In both cases, that is good, but you don't want to overexpose your account. And if you enter here with 1%, what you could do is enter here with 0.5%. So what you would do is, for example, because again, even if the price touches the smart cloud, it did not break above the outer line of the cloud, I'm good. So what I'm going to do is I'm going to enter here with 0.5%. I do 1% all the time, so that's why I might take like 3 in a row or 5. That is still good for me. So I enter here at this level. My stop loss is going to be above here, above the previous high, and my take profit is 2 times. So my take profit is going to hit here. Another trend, another entry signal here. That's the third one in a row. So I'm entering here. Okay, at this level, my stop loss is going to be above my take profit as 1-to-2 risk reward ratio, and that's another trend. Now this is really a good example because you got this a win, you got this one a win, you got this one a win, and up until here where I got this pullback, but the price breaks above the cloud and even closed above it, which neglects the downtrend. The moment the downtrend is neglected, I'm expecting 2 things. It's either a sideways move, which happened here, or the price will take off. It's even 3 scenarios. It's either sideways, the price will take off up above and create an uptrend, or the price will recover. And what I mean by recover, the moment the price breaks below this low and keeps on moving down, that is what I mean by the downtrend being recovered. What I see here is that the price closes above the range. That's when you want to trace the range. The price closes above the range, and I get the price above the cloud. So I'm in an uptrend. I got this signal here. I would enter at the entry here. That's where I got the entry, and I would put my stop loss here. That's my stop loss, and what happened is the price reverses back and take me out with a loss. And unless if you moved your stop loss with the trailing stop, the smart trailing stop, and you'll get out with a break even. The price breaks below, closes below, neglects the uptrend. I didn't see any signal up until we broke above again, and that also tells me that we are in a huge and a bigger sideways move. When I'm in this case, I am waiting for the price to start going to the upside, which happened almost here. So I would neglect this signal here because we did not break above this previous range. So, but here at this point, we broke above the range, and this point right there, that's the break above. So what I'm going to do is I'm going to enter here at the signal right here, put my stop loss below, my take profit at 1-to-2 risk reward ratio, and I got the signal here, which allowed me again to capitalize and maximize on this trend. So what I would do is I would enter again. Why not? As long as I have this high, right? This higher high. So I'm entering right there. My stop loss is going to be right there, and I'm going to take my profit somewhere here, or maybe the price will reverse and take me out, but this one ended up working, the first one here. When I entered here, I take my profit right there. The price breaks below here, closes below. That neglects the uptrend. I didn't get any signal to the downside because the price started to move sideways. So I would mark again the sideways zone, and I would wait for the price to give me another entry, which I got here. I'm entering here. Okay, I would enter at this level, put my stop loss below. That's going to be a quick win. I would enter again at this signal right here, and then put my stop loss right below. That would take me out with a loss. That is fine. I would enter again here, stop loss here. That would take me out with a win. I would enter again, my entry here, stop loss here, and that would take me with a win, probably, if I calculated that right. But in all cases, this is how it's going to go up until the actual moment right now. So the price closes below the cloud that neglected the uptrend. So we started looking for a downtrend the moment the price breaks below this high here. So the price is starting to move down. But what happened here is that it closes above this. So that neglected this one. I'm waiting for the price to close below this, which happened here at this level. So any signal coming after this close below, I'm taking it. So what happened here is I entered at this close of the candle. My stop loss is going to be above the structure, and I get a win here. Right? So that's going to be more than 1-to-2 risk reward ratio. So guys, this is M5 euro dollar. This is just an example of how to go about all the scenarios. But one very important thing is do not forget to take the trend pattern into consideration. And when you are taking a trade, like for example here, when I was thinking about taking this trade, what I would do is I would double check the trend panel, and I want to have the M5, the M10, M15, and probably M30 all to the downside. That is going to give me more confluence and more redundancy. It would be only fair if I do more currencies in a different time frames, but we are up like 30 minutes already on this video, and I would want to do more, and I will try to do more in the future, but I was trying to like teach you guys how to go about it. And it's your turn now to go ahead and try it on the dollar, try it on the euro, try it on the Canadian, try it on the AUD, and try it on all the other currency pairs that you have. And let me know how it works. Let me know what you think about it. Let me know if you find something. And most importantly, I want you to really work hard, because there's only one thing that is most important in trading, is the chart time. How much time you spend in front of the chart, because the only way that you are going to create a good relationship between you and the chart is to spend time together. So spend as much as possible time backtesting, reading, doing all kind of analysis like I was doing, and running yourself through the scenarios. That's the only thing you're going to perfect yourself. And that's the only thing you're going to master this indicator. This indicator is gold. It has many strategies. It has everything you need to know, everything you need to be trading successfully, actually. But the only thing is you need to master it. To master it, you need to spend time in front of the computer and backtest, collect data, analyze, and backtest again, collect data, tweak, and do all those study stuff, and you will be better with the time. So until the next part of this course, guys, take care of yourself and see you soon.